Winter's not coming back. We're past that. We're past that phase. If Bitcoin's not going to zero, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Quintez at CFTC feels the same way. The banks are going to custody Bitcoin.
As of mid-2025, over 100 publicly traded companies, including Strategy, formerly MicroStrategy, have turned their balance sheets into Bitcoin treasuries, gobbling up the roughly 450 BTC available each day. This demand-supply squeeze is tightening, with ETFs also absorbing massive inflows, $44 billion in net new capital and $122 billion AUM in spot Bitcoin ETFs. Last year in Nashville, Saylor predicted 29% annual appreciation out to 2045, $13 million BTC. Now, with growing institutional adoption and shifting U.S. regulations that favor banks holding Bitcoin, Saylor reportedly believes 30–40% annual returns are possible. He's even more bullish on his $13 million forecast. From regulatory clarity in the U.S. to banks being granted permission to hold BTC, the legal framework is strengthening. A pro-crypto political environment, championed by Trump-era rhetoric on a national Bitcoin reserve, is further bolstering sentiments. Strategy has been aggressively buying, adding over 4,000 BTC in May alone, now holding 580,000 BTC, 2.7% of total supply. These moves contributed to Bitcoin reaching nearly $112,000 in May, momentum that's hard to ignore. So if you believe that capital keeps flowing in, that supply is shrinking, and that regulation is giving a green light, Saylor sees all the pieces aligning for a mega bullish cycle. And he's not stepping back. If you're excited about Bitcoin's next chapter, smash that like, drop your predictions in the comments, and share this with someone who needs to hear it. Hit subscribe and tap the bell. I'll bring you the freshest updates on Bitcoin, crypto, and market moves. Let's ride this wave together. Let's get back to more insights from Michael Saylor's bullish Bitcoin price prediction.
Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive. Now, if you do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply.
Yeah. BlackRock
and the ETFs are buying another measure of that. And we've got nation-state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
In other news, a bold prediction is making waves in the crypto world. Matt Hougan, CIO of Bitwise, one of the largest and fastest-growing crypto asset managers, is doubling down on his call. Bitcoin will hit $200,000 by the end of 2025. It's not just a wild guess. Hougan's forecast is backed by serious numbers and momentum. He points to the tidal wave of institutional money pouring into spot Bitcoin ETFs, billions in inflows, shrinking supply, and rapidly growing demand. According to him, this isn't a hype cycle, it's a structural shift. He explains it like this: we're seeing the fastest institutional adoption of any asset in history. And yet, the market still underestimates what happens when trillions in traditional finance collide with a fixed supply asset like Bitcoin. With the halving behind us and macro tailwinds building, lower interest rates, regulatory clarity, and pro-crypto political sentiment, Hougan believes the path to $200,000 is not just possible, it's probable. Let's get Matt's insights speaking with CNBC on the latest in Bitcoin and crypto markets. Take a listen.
When we look at the market, Talia, we see a structural imbalance between the demand for Bitcoin and the available supply. We know the Bitcoin network only produces 165,000 Bitcoin per year. That's the full supply. And we see demand from ETFs, which are pulling in hundreds of thousands of Bitcoin per year. Corporations, as we discussed, also purchasing hundreds of thousands of Bitcoin, and governments purchasing, in our view, hundreds of thousands of Bitcoin. As the structural demand supply imbalance plays out in the market, it's exhausting the available supply. We think we're close to breaking out to new all-time highs. And when we do, we think, the market could run all the way up to 200,000. It would help if the US government announced net new purchases of Bitcoin for its US strategic reserve. It will help if we get passage of the Genius Act and maybe market structure regulation in the US. But even if those things don't happen, we think the demand from institutional investors and corporations and governments around the world are enough to lift this market much higher. It is just a fantastic setup for Bitcoin right now, with worries about the dollar, growing institutional demand. I think it's going to be a fantastic second half of the year.
Bitwise launched a GameStop-focused covered call ETF. Now, we reported here on CNBC that the video game retailer announced late last month that it bought nearly 5,000 Bitcoin, adding to the growing list of public companies holding the cryptocurrency on their balance sheets. Can you take us through what prompted Bitwise to launch this new ETF tied to GameStop, and how are these covered call ETFs designed to generate income for investors?
Absolutely. Yeah, thanks for the question. One of the things about GameStop and one of the things about crypto that we know more than anything else is that they're volatile. GameStop is a famously volatile stock, and of course, crypto itself tends to be volatile over time. The beauty of covered call strategies is that they translate that volatility into income. We've seen success already at Bitwise doing covered call strategies on stocks like Strategy, like Coinbase and others. And we thought, why not apply that to GameStop as well? It's a way for people who are excited about being long GameStop to maintain that long bias, but also generate really substantial income by translating that volatility into dollars in their pocket.
Now, in a news release, Bitwise points out that as of March 31st of this year, 79 public companies hold a collective $57 billion in Bitcoin on their balance sheets. That's a nearly 160% rise over the past year. What do you attribute that bump to? And generally speaking, why do you think public companies are betting big on Bitcoin?
Yeah, I think there are a few reasons for that. We think this is a mega trend, by the way, that's going to accelerate into the future. One, of course, is increased worries about the dollar. Corporations globally are sitting on records amount of cash, and what they've historically done is park it in short-term US treasuries or, in fact, in cash accounts. But with the huge money printing and growing deficits, that no longer seems like a valid approach. They need another way to protect their wealth from degradation, and they're turning to the best horse in that race, which is Bitcoin. Beyond that, the investing audience has just recognized that this is a positive strategy, and so companies are being rewarded for taking this bold step of putting Bitcoin on their balance sheet. We think there will ultimately be thousands of companies that do this. We think we're in inning 1 or 2 of this mega trend period, but you're seeing it accelerate over time. It's very exciting.
Let's turn to a big development for crypto, which is on the regulatory front. Last month, the Senate advanced the Genius Act stablecoin bill on a bipartisan vote. In a blog post after that development, you argued that outside of the January 2024 approval of spot Bitcoin ETFs, this is the most important regulatory development in the history of crypto and may even be bigger. I spoke with your CEO, Hunter Horsley, at Bitcoin 2025, and he told me he agrees with your assessment. You outline your reasoning in great detail in your blog post, but can you explain to our viewers why you think this development could be even bigger than last year's approval of spot Bitcoin ETFs here in the US?
Yeah, absolutely. I think it's a massive deal. Look, for crypto to really reshape how the world's global finance works, which is the market we're going after. That's how crypto goes from $3 trillion to a $30 trillion market. We have to be at the center of how global finance works. We need to rest on a strong foundation. Right now, crypto regulation in the US, which is the world's economic center for better or worse, rests on executive orders and legal interpretations. There's no laws that protect it for the long term. If we look back at the history of technology, we've seen major laws set the standard that allowed for technologies like the internet to grow and dominate the market. We need the same thing in crypto. And the fact that we made it through the Senate, at least onto the floor, we passed the most difficult hurdle, tells me that we're going to get there. If we do get there, I think we're looking at the longest and most sustained bull market that crypto has seen. I think it takes us up a major leg in terms of what crypto can do.
Expanding on that, speaking at Bitcoin 2025 in Las Vegas a couple of weeks ago, Vice President J.D. Vance told attendees during his keynote address that he's optimistic that the Senate will pass a, quote, clean Genius Act and that the House will follow suit. However, I read that Republican Senator Josh Hawley is breaking with his party to oppose the Genius Act, saying that it should be struck down as it's written, fearing that it would be a huge giveaway to big tech. What would this mean for the potential advancement of the bill in the Senate? And are you still optimistic we'll see stablecoin regulation here in the U.S. this year?
I'm still optimistic that we'll see stablecoin regulation in the US. It has bipartisan support, and more than anything, the US government actually needs it to pass in order to continue to fund the government. Remember, stablecoins have become a major purchaser of US treasuries, and the government is on pace to issue more and more treasuries, more and more debt. So I think smarter heads will prevail. I think we'll get this through the Senate. I think we'll get it through the House. I think it will be signed by the president. And again, I think that will set the stage for a major bull market in crypto that could extend for multiple years.
But in a blog post last week, you outlined a, quote, different approach to thinking about Bitcoin's role in a portfolio, arguing that even though Bitcoin is a highly volatile asset, as you mentioned today, it doesn't mean that adding the cryptocurrency to a portfolio makes it significantly more volatile. You compared 4 portfolios with different allocations, one without Bitcoin at all, and the others with either a 5% or 10% allocation. What was your big takeaway from comparing those different portfolios?
Yeah, I think they're really two. The first is just because Bitcoin is volatile, when you add it to a portfolio mix, it doesn't increase the volatility of the portfolio overall because it's not correlated with stocks and bonds, right? That's the famous free lunch of investing. When you add a non-correlated asset, it can improve your risk-adjusted returns without increasing your volatility. But the other point I was making is something that I find when I talk to crypto native investors, which is that they tend to have very large allocations to crypto. And you might think that would increase the volatility of their portfolio, but they offset that by making the rest of their portfolio more conservative. Because they're taking a big bet on crypto, they don't need to take as big a bet on equities or on bonds. They can hold a significant amount of cash. And I think if you play with the ratio between the stocks, crypto, and low risk bonds in your portfolio, you can create some really exciting returns, really dynamic portfolios. The old days of having 60% stocks and 40% bonds, I think those are over. I think people need to move to a new kind of portfolio that looks at stocks, cash, and crypto and modulates the risk between them to get the kind of risk-adjusted returns that they're looking for.
And that's a wrap on today's video. But before you go, let's take a step back. Michael Saylor's conviction is louder than ever. A $1 million Bitcoin? He's not just dreaming, he's betting big, and he believes it's coming sooner than we all think. But he's not the only one turning heads. Matt Hougan, CIO of Bitwise, is standing firm on his bold prediction, $200,000 Bitcoin by the end of 2025. And he's got the data to back it up. These aren't just bullish whispers, they're thunderous signals that the next chapter for Bitcoin could be historic. So here's the question. Do you see it happening? With all the positive tailwinds and pro-Bitcoin momentum building, are we on the path to higher 6-figure Bitcoin or even 7-figure? Let me know in the comments. I'd love to hear your take. And if you got value from this, hit that like button, share this video with a fellow crypto believer, and if you haven't already, subscribe to the channel. We drop brand new updates every single day to keep you ahead in the crypto game. Thanks for watching, and I'll see you in the next one.